Focus on the financial space now. Santanu Chakrabarti, India analyst of BFSI at BNP Paribas, is now joining us on the show. Santanu, the big takeaway over the last couple of weeks has been that the RBI has turned a little more accommodative. We've got liquidity injection, a rate cut in the prior meeting, and now the risk weightages for MFIs, etc., have come down back to 100% versus the earlier 125%. So that's been restored. So on the whole, in a nutshell, should one be incrementally more positive on the financial sector?
Good morning. Yes, absolutely. You have nailed it. So when I looked at the risk weight changes that they have made, whether it's for top-rated NBFCs or whether it's for MFIs, to put this prism of immediate growth would be actually a little premature, because frankly, if you look at NBFCs like Bajaj Finance or Chola, etc., where they're growing slowly, not really. I mean, the biggest beneficiaries of risk weight reduction in terms of banks' incremental willingness to lend to them, in any case, do not have a whole lot of dependence of their growth plans on such things. Similarly, if you go within MFIs, you'll realize that a lot of the reticence or reservations that banks have with lending to certain MFIs has to do with how they perceive the fundamentals of the MFI business today. But you have nailed it when you said that this is a critical communication of regulatory intent. Yes, there's been focus on liquidity. We have already seen rate cuts, and these are probably the first signs we are seeing of credit policy easing, and that bodes very well for the sector, both banks and as well as NBFCs. It shows that the regulatory focus is shifting from towards growth accommodative in a meaningful way, and that has to bode well. I absolutely agree with you.
So, Santanu, morning, Prashant here. Straight off the bat, before we talk about some of the more macro stuff, in your opinion, which are the listed players which stand to benefit the most?
In terms of these changes, as far as the arithmetic of the capital release goes, it obviously favors or has a greater marginal impact with those who are nearest to the minimum capitalization red line. So you are thinking PSU banks. That's the first order impact. Second order, at least within the MFI space, those companies whose early warning signals on portfolios will start to look up will now incrementally get more funding from banks. So, the winners among the MFI space and most of the larger PSUs are probably the biggest immediate beneficiaries of this. But as you started the discussion by noting, ultimately, the change in this regulatory attitude, if you will, is probably beneficial for overall lending as a whole.
But should one expect, as you said, right, that banks are anyway a bit hesitant to lend to MFIs because of the cycle that we're currently in? So right. For, calendar year, say 2025, will there be an incremental increase in the lending rates? Will the cost of borrowing for MFIs come down in that order, or it's too premature to think like that?
The way one should think about MFIs, in my opinion, is that ultimately it's a fairly high yield, high margin business, right? So they are not so much worried about cost of funds. And today, if you go speak to any MFI CFO, the first thing they'll tell you is if they can lock up funds, whether it's 25 basis points cheaper or dearer, is not their clear priority right now. They want to build enough and more cushion within the balance sheet for the cycle to play out. How this regulation change helps is as the as the numbers start to settle down, as they will, for specific geographies, specific MFI names over the next 3 to 4 months, what you'll see is the blanket risk reduction approach that a lot of banks might have gone with as far as MFI is concerned is going to become more and more nuanced. So those MFIs which actually do not get impacted that much by the specific geographies which seem to be under stress will be the earliest beneficiaries of the changes that you have seen today.
Any names?
So, obviously we are thinking about, in terms of delta, you'll have to think of single name MFIs rather than banking MFIs, because Banks which have high MFI exposure do not have a liability side problem. They have their own deposits to deal with.
All right, Santanu, we'll leave it there. Thank you very much for joining us and running us through all of that. Appreciate your time here on CNBC TV 18.